Hey everyone, me Kevin here. Welcome back to another Market Close live stream. Boy, it's been a messy day. Not only did we get the stimulus package passed, we had the bond auction, but the market's kind of been honestly weird. It's been a little unpredictable. We've got Tattooed Chef earnings today. We've got AMC earnings today. We've got other earnings today. We will obviously be covering those. Tomorrow, we also have, I think tomorrow we have EXPI earnings, which that should be kind of fun to see. Let's see what else we have today here really quick. We've got Oracle, AMC, Best, is that Best Buy? I honestly, I don't invest in Best Buy, so I don't know. Best Buy, no, yeah, see, Best Buy is BBY. Okay, that's what I thought that was sus. Limoneira, what else reports today? We'll look at some of the big ones. We'll definitely look at AMC. We'll definitely look at Tattooed Chef today. Lending Club, that's going to be interesting. What else reports today? Multiple reports today. Skills reports today. Yeah, there's Tattooed Chef on the list. Okay, those are probably the big ones reporting today. If I missed one, just let me know in the chat here. But anyway, so we got some big reports coming out. We'll be obviously watching those live. Right now, Joe Biden is talking about the COVID vaccines. So I don't think we'll listen to much of this. Maybe we'll tune in briefly here, but most of what we do is going to be focused on the market here.
Materials and vaccine production, such as...
No, as expected, he's mostly just talking about vaccine production. That does kind of take away CNBC, but there's probably a place they can go to that won't be covering Biden. I don't know this, but let's just take a guess. I'd be shocked. They're on commercial. Fox is on commercial. Oh, you can't make it up. Okay, well, so even Bloomberg's got him up right now. So Bloomberg and CNBC have him up talking about COVID-19 vaccines, but not Fox. Fox is on commercial. So let's go ahead and take a look at the sticks and see what we've got going on in the sticks. So, very kind of bizarre day. I mean, today started out very, very strong up to about an hour before the bond auction, somewhere around 11 Eastern. Things really started to fall apart. Now, right now, we're going to start by looking at Roblox. But Roblox kind of, popped out of the open. Then we started getting that selling pressure around 74. We couldn't get to 75 on this one. And we really sold off down to where we are now at about 69. We hit 68 as a low. And really, I think what this is Roblox is just going into a crappy day. Like the day is just weird. It's not very clear exactly what we're expecting here. I mean, AMC is all of a sudden down, and AMC was skyrocketing this morning. It was crazy. It was following GameStop up, Sundial down, CLII down, Peloton down, Twitter's down, back down to 64. It's actually been trending down for quite a bit here. Cannabis down, Wayfair down, eBay down, Zoom down, Tilray down. The airlines are down. BlackBerry's down. Macy's is down. Nano Dimension down. Moderna. Tesla's down about 0.4%. It is, I shouldn't say a fourth, I should say 0.4%. It is at 670, which is, I bought a little bit of Tesla right about here. And we've just had a very, very kind of bizarre roller coaster of a day here. Etsy at 206, Facebook pretty much flat, Disney's kind of flat, up 0.5% here, Nikola, Upwork, Starbucks, AT&T, these guys up about 1.5%. Churchill's up 1.5%. I mean, but that's nothing compared to the 27 high we hit today. We hit some beautiful highs this morning, but I don't know what happened. I mean, the bond auction, it wasn't bad. It's not like there was horrible news in the bond auction. Let's see. Maybe what do they say? AerCap buying jet leasing business. What's this? Jet leasing business?
So here's how this deal is going to go down. And by the way, GE and AerCap are losing at the moment, each 5%. GE will still have 46% ownership stake in the company and will use the $24 billion in cash it's receiving from the overall $30 billion deal.
They're buying out the GE jet leasing. Okay, well, we don't. I don't know. I don't really care about this right now. Sorry if you're really into jets. I'll tell you, one of the trades that has just been really, really stable is Fisker. You know, Fisker, that's one of those that's just been holding up throughout the day. I mean, it went up 10%, and it just kind of stuck 10%. So that's, I think, what we're seeing here. Open Door, Social Cap. So these guys coming back after the Chomp SPAC. a disaster. Gore's Matterport up a nice 6%, but this is kind of where we've been today. Now, Bitcoin at 56.4, it ran up to over, I want to say 57.5, 57.4 after the stimulus was passed. But other than that, very kind of bizarre day, I have to say. It just very not sure which way we're going today. Makes it kind of difficult to trade. Actually, makes it very difficult to trade, unless of course you're just like going in and out pennies at a time, which is fine too. A different style of trading, but it's a little harder to swing trade, I like to say. Yeah, I mean, I don't know what. Geez, we got 9 minutes to the close in earnings, but what's Biden saying here?
Including home testing. Schools will soon have the funding and resources to reopen safely.
Now, he's kind of just reiterating stuff we already know. So no real news here. Let's see what Bloomberg has to say. We will be doing earnings momentarily. Bloomberg is covering the Biden speech as well. So we've got Bloomberg and CNBC covering the Biden speech. We got Fox News talking about anything else that they could possibly talk about. Fox Business, I should say. That is different from Fox News, apparently, or supposedly. And we've got a market that, I mean, look, I'll take the 3% on Enphase, but I have to say, I mean, this isn't impressive compared to what we had earlier in the day. You know, earlier in the day, we had a rally, and a lot of that rally is just sort of evaporated. It's a little weird, little odd, for sure. But again, we will be looking at earnings. So what we can do is we can prepare for those earnings. We could go on over to our Bloomberg over here. And what we're going to do is we're going to do a few things. Let's pull up the VIX. Then we're going to pull up the 10-year. Then we're going to start pulling up the actual deals that we want to look at. All right, so let's get the volatility index. Here we go. All right, so we got the VIX, and then we want to do the 10-year. Okay, it looks like Biden is walking off stage. Hold on, somebody's asking him something.
The surplus will, if we have a surplus, we're going to share it with the rest of the world. We've already decided we're going to work with the outfit COVAX. We've committed $4 billion to help get the funding for more vaccines around the world. This is not something that can be stopped by a fence, no matter how high you build a fence or a wall. So we're not going to be ultimately safe until the world is safe. And so we're going to start off making sure Americans are taken care of first, but we're then going to try to help the rest of the world. Thank you.
Is there a crisis at the border, sir?
Republicans voted for. All the shouting is always great. I love it.
President Biden there just addressing the press, taking only one quick question, no follow-up questions. Of course, he followed comments from Alex Gorsky, the J&J CEO, and Ken Frazier, the Merck CEO. The president saying the partnership between those two companies was historic and unprecedented. And Ken Frazier, the Merck CEO, saying, of course, that coming together, many saw of a coming together of rivals, but in these extraordinary times, we're colleagues, not competitors. It allowed that and many other things, 2.9 million people to be vaccinated on Saturday, as the president just updated it.
All right. So we got the VIX here. VIX at about 22, just under 23, actually, I should say. So VIX certainly lower than what we've seen in some of these prior days here. This was March 4th. We've got over here. We're kind of zoomed in a little bit, actually. Let's rather, we're zoomed out. Let's zoom in a little bit further here. Here we go. Here's a little bit better of a better look at the VIX for us. So this is giving us the volatility index. Keep in mind, the volatility index is delayed on this. So this is all from today, this portion right here. So we've had a decline in volatility here. We've got the 10-year, which is not delayed. This is the current 10-year. Sorry, we're at the 1 year here. So let's go down to 3 days. So on the 3-day chart, we are at pretty lows here. How low did we go? This was 153. We are down at, where do we stand right now? Come on, mister. Oh, there we go. Okay, so 151.95. Okay, yeah, we can see it up here. 15178 as of about 15 minutes ago. So a little bit higher than where we did fall to at one point here, but barely. So these are the 10 years after the auction that we had today. So drama has subsided here. We've got Tattooed Chef ready for earnings. So we will keep this this on deck here. For Tattooed Chef options to be implying a 16.8% move, I have to say, I don't think it's going to be a 16.8% decline. I I don't think it's going to move that high. Could this stock go back to $25? Yeah. Is this going to go less than 18? Probably not. Although maybe, I guess considering that, 16.8% could happen in either direction. It will be fascinating to see how much of a movement Tattooed Chef gets here. Frozen foods, I think the valuation is great, but how the market reacts is going to be something different. So we'll see. AMC. Well, AMC's got earnings coming up. What do we really expect from AMC earnings? It's not like their movie theaters are really operational. It's just like, and they paid off some of their debt recently. They'll talk about that. That'll be cool. But seriously, why are we looking at earnings at AMC? What earnings? I feel like what's going to happen when earnings for AMC come up on the screen's just going to go blank. Just error, cannot compute. We'll see. All right. Well, let's hit the sticks here. See if we have any last minute changes here. Let's see. All right. So Roblox is up still at $70. $70. Remember, we did our little spreadsheet this morning. $70 puts them at a market cap of roughly $46 billion. Whew. Man, for a company that was worth $500 million like 3 years ago, that's some dollars right there. Mm-hmm. Yep. Okay. Oh, Zillow. Where did Zillow come from? Now, Zillow trying to do a slight little rally here into the close. Looks like Redfin's actually selling off a little bit into the close. Fisker's doing, not sure what it's doing into the close. A lot of overall kind of just the same price increases today. We're not seeing this vast decrease. Tesla kind of selling off a little bit into the close there. All right, let's take a look here and see what the overall markets are thinking.
In totals, the most new highs we've seen on the New York Stock Exchange you have to go back to the weeks after the 2016 election of Donald Trump to find a moment.
Alex here, by the way, says he's bullish on Roblox for being a developer and player for over 10 years. And they released their roadmap for the year on their developer forums. The future looks bright, he says. Nice. Thanks for the $10.
He's lying. And if you think about that setup in late 2016, when all of a sudden we had banks and oil companies and materials rallying, cyclicals, 2017 was one of the least volatile years on the books, according to my pal JC Peretz at All Star Charts. So when you look at the big picture, you become less concerned about did tech rally today or not. Like it's interesting if it did, it really doesn't matter that much if it didn't. So I think for investors, the takeaway is a lot of things are doing what you want them to do.
90 seconds left in the session. Mike, what are the internals telling us?
Yeah, pretty supportive, pretty strong, as you would expect based on the headline numbers. Actually, the equated S&P is up 1.1%. Look at the New York Stock Exchange advancers versus decliners. It's been running about 3-to-1 to the positive side for most of the day. That pretty much continues right now. So nothing too much in the way of a blemish right there.
Yeah, just it feels stable is the thing. We're going to get the bell here in about 58 seconds here, but feels very stable. Not exciting. This morning was exciting when Tesla was like, oh yeah, going 710 plus, NEO back over 45. The cool thing is it gave us another buying opportunity. I did go shopping today. I spent over $150K buying stuff today. And we've been relatively flat just the second half of the day. Actually, it's almost kind of like the second 80%, like that most of the day. It's just boring. All right, so we've got earnings on deck. So we'll see. And we'll see what happens with EXPI earnings tomorrow. Exactly. All right, let's listen in.
We hit intraday record highs yesterday and the day before. Didn't get a record close. Looks like we'll get that today. The strength in the S&P 500, it's everywhere except for technology. Energy is the best performing sector right now. Materials, financials, and industrials also near the top of the list. Information technology is lower, though Josh Brown doesn't care about it. The Nasdaq is also lower, just went negative on the session. It was down. It was up as high as more than 1.5%, and then looks like we're going to close a little bit lower. Small caps are doing well today, higher by 1.8%. Regional banks are higher. A lot of the cyclical groups that are tied to the reopening of the economy and the expected growth we're going to get from that.
Music?
Also, Treasury yield.
We need the music.
That auction that we got earlier, the 10-year, didn't really spook the market. And so we continue to see a rally, except for the Nasdaq, Wilfred.
Yeah, the Nasdaq just read one sector red, technology on the S&P. Welcome to the closing bell, everyone. I'm Wilfred Frost, along with Sarah Eisen and Mike Santoli, CNBC senior markets commentator. As Sarah just mentioned, the Nasdaq Composite and the Nasdaq 100 both in the red, albeit just slightly. The S&P up 0.6%, and the Dow up 1.5% or 462 points. The high of the session was up.
All right, let's take a look at the sticks ourselves here. So we're going to switch on over. Abdallah, I see your message here. Watch lecture 1.1. It'll get 1.0. I'm sorry. Lecture 1.0 will get you right in the live streams. All right, folks. So let's go. What do we got in the close here? So the last price. These are the last prices here. We're not going to look at the after hours just yet. We'll give it a chance here to catch up. How did things close? So costs. What a wild ride cost was on today. I mean, at one point, this thing went way down to like 23.86 and hit a high of 40.48, but actually closed out the day at 30.28. Jeez. Roblox ended up about $5 higher than its IPO price, even though it says 54%. Nobody really got that on the public markets, up 54%. Our GoPro coming out of, it feels like nowhere here, up 12.3%. Nordic American Tankers today up to $3.5. Fisker, $10.51. Looks like a little red candle forming there after the hours, or after the close, rather. Open Door, 9.4%. Luminaire ending up about 8.6%. Social Capital, Redfin, 8 and 7%. Gores up over 6%. Good. Shift up 5.6%. Canoe trying to get back to that $15 a share, although we got a big fat red candlestick over here, potentially in the after hours. We'll sort by after hours in just a moment. EBIX back to $30. Perfect. This was a swing trade. I mean, that should be profitable at this point. I'll take a look in a moment. That should be profitable now that it's back to 30. Although I kind of want to hold it. I've been wanting to hold that to like 34, 35. We knew it would come back. It's just a matter of time. Obviously, everything sold off in the last week and a half. It's been a ride. We've possibly even as long as 3 weeks here, depending on when you really started feeling the pain. Lemonade, $94, slightly green. Alphabet at $2,055. Booking Holdings up, Marriott up. Neo basically flat at 51. And then sorting by losers, OGI, AMC, Sundial, Climate Change, CLII, Bed Bath, Twitter, Peloton, DoorDash. All these guys down over 3%, some of them down 6%. Let's go ahead and see what's going on in the Bloomberg just to see when we get these earnings. It does look like the volatility index ended down. The 10-year bond didn't end at lows, but ended at about 1.517. Tattooed Chef does not have anything yet. And we have earnings ahead at both Tattooed Chef and AMC with no indication just yet of results. So we are on standby. Someone's asking if this is confirmation the rally will continue. You know, it's certainly a sign that the market is stabilizing at these levels, not necessarily a sign that we're going to go right back to the pricing that we had 3 weeks ago, but certainly, you know, a lot of, what's it called? A lot of excitement for a potential rally here. So still nothing on Tattooed Chef and AMC. Let's listen for a moment and see what CNBC is commenting on. I will watch both Tattooed and CNBC here.
It started to be put in place to guard against a recession. Turns out much of that stuff is going to end up getting dropped to the bottom line in the form of profits when it doesn't get used against losses, which we really just didn't see this wave of losses that customarily you would have to contend with as a bank. So I think that's a really good point. Last thing, I want to return to something Santoli said before the bell, which is important, about dividend growth. Let me explain to you the way this whole thing works.
AMC, by the way, moving 2% in the after hours.
America right now, from ETFs, from mutual fund companies, every asset management firm has their wholesalers doing email blasts and doing phone calls to people like me on the buy side to talk about inflation, because that's what our clients are asking us about. And if you want to know why our clients are asking us about that, it's because that's what you guys are talking about on CNBC all day. And that's what the Journal is writing articles about every morning. So what's the answer for inflation in a portfolio? Well, it turns out REITs do a pretty damn good job, way better than gold, But stocks that are increasing their dividends over long stretches of time and into the future are the very best.
All right, Tattooed Chef reports. Tattooed Chef reports announced today fiscal financial results for the 3 months ended December 31st. Solid financial results for the fourth quarter. Full year 2020 driven by record. Okay, let's go. We will increase store count by 41% and points of distribution of branded products by 35% by the end of the first quarter. We have a long runway for growth. Yo, come on, give me some numbers here, would you? Come on. If they're not heavily watched, they don't get numbers. They're like showing up on the terminal. I have to go dig for it myself. Here we go. Revenue was $39.6 million, 48% increase compared to the $26.8 million in the prior year. Okay, and that's pretty good. Let's see. I don't know what the expectation was. I can pull that in a moment. Net income was $41.5 million compared to a net income of $2.2 for the prior tax year. That's pretty good. Let's see here. Okay, included a one-time tax benefit resulting from change to a C corp to an S corp at the time of the reverse merger. Okay, fine. Adjusted EBITDA was $3.7 million or 9% of revenue. Yeah, okay, so a slight increase on margin here. That's good. That's one of the downsides of restaurant or sort of food-related stocks is you're generally going to have low margin. Let me see really quick what the Tattooed expectations were. Tattooed Chef earnings expectations. Let's see here. Revenue was 148. Okay, revenue was 148, 75% increase. I want to see what we had for expectations. So, yearly forecast. Okay, quarter end December 2020. They had an earnings forecast of 3 cents was about the consensus. And it looks like Bumble also just reported. Bumble beat by $2 million. I did not know Bumble was reporting today. That's funny. We'll figure this Tattooed Chef thing out, though. I'm more interested in this right now. Fourth quarter results. Okay. Let's see. Operating expenses, gross profit, net income. Do we have an EPS here? Benefit, a little bit of a benefit here. Okay, where's EPS? We'll see how the stock's moving to in a moment. Balance sheet, cash flow. No. Okay, I'll have to dig a little bit more to find it. I could also pull up the filing. I mean, it doesn't sound bad. I don't know what the expectations were, though. I should have probably looked that up. But that's okay. Let's see how they're doing. Tattooed Chef is barely moving. It's moving 2%, but that's not a big move. Yeah, I mean, it doesn't feel like a shocking explosion, right? I mean, this is good, though. I mean, it's good. It didn't crash in one way or the other. That's good. So do we? Oh, here we go. Do we have EPS over here in the financial statements? I'm sure we do. Good revenue growth. We've got operating expense. Operating expenses definitely exploded here. See, this is an explosion in operating expenses versus what they had last year, because their revenue didn't their operating expenses exploded way more than their revenue here. So that'll be interesting to see what their explanation is here. Net income, though, way up. 41. What? 41. How'd they get this? Operating expenses, gross profit. Wait a second here. Income tax benefit, net income. I wonder, is this changing? This can't be in. It's not in. What's the? Did they? This is very confusing. Net income. Income before. Okay, income before provision for income taxes. Income tax benefit. How did they get? Okay, well, I'll have to figure this out. This is very odd. This is a very odd income tax benefit here. I mean, that's massive. We have to back that out. And basically, they have a loss because they had some kind of massive tax benefit here. This is that S corp to C corp transition they were talking about. But that's leading to what they're saying, an income per share here of about 63 cents. I don't know. I got to dig into this one a little deeper here. That's a huge benefit there. And that's definitely complicating the earnings per share. And I think investors are going to have to take a minute to digest that. Let's listen into this for a moment.
It's $7.3 billion, in line with forecast. That's cloud revenue and maintenance fees for traditional software in that segment. The other big segment, cloud license and on-premise license, up 4% to $1.3 billion. Forecast called for $1.2 billion. Some capital return here, news as well. The board of directors increasing the authorization for share repurchases by $20 billion. They also do raise their dividend. Remember, heading into this print, investors had piled in. This stock was up about 15% over the past month. So the top performer.
The problem with Tattooed Chef is if it weren't for this one-time tax benefit, they would have lost money. They would have lost money. Look at this. They went from profitable to losing money. See, look at this. And it's because these operating expenses skyrocketed. And who knows, maybe that's because they had to hire, somebody to deal with the SEC and attorneys and all that crap, right? It's probably what it is. But I mean, look at this. From 2019, you go from about $2 million in expenses to about $8 million expenses. So that's about 4x in expenses, whereas revenue did not double, right? 4x expenses, less than double revenue. And again, it's operating expenses, I should say, not cost of goods sold. Although cost of goods sold went up a good chunk as well. A good gross profit growth, though. But this is interesting. If it weren't for that one-time tax benefit, they would have lost money. I don't know. And they haven't lost money in the previous quarters and the 6 months ending in. So a little bit mixed on this one. I'm not, and it's confusing when they just do this SPAC because it screws everything up. We'll see. AMC has still not reported earnings. Let's take a look at how the stock's behaving in the after hours. So Tattooed Chef, where'd it go? Uh-oh. Oh, see, Tattooed Chef down 2% now. I think now maybe the market's finally digesting what the HE double hockey sticks is going on here. But I have to say, for me, I'm not, this isn't to pat myself on the back. It's not at all. You all already know this, or many of you already know this. I did trim Tattooed Chef before February 19th when I sent out my sell alerts, but it wasn't because I thought they would miss. I didn't think they would miss at all. I thought they were going to have a good last quarter here, but it was mostly to reduce my margin. And then the lingering concern I have is how well are frozen foods going to do post-COVID, right? But I've really got to go dig into this a little bit more because I'm a little bit frustrated with what I'm seeing here. Let's see, liabilities, accounts payable up. I mean, that makes sense because they had so much more product here. But that big bump in the operational expenses, I'm sure they'll have an explanation somewhere for that. Yeah, but that tax benefit, once you take that out and you go from a profitable company to a losing company, money-losing company, it's going to piss people off. I bet you they'll explain that in the earnings call because it's a mess. And the call is at 1:30 p.m. Eastern Pacific time. Okay, good. Is it today? Yes, it's today. So the call's in about 15 minutes. And then we're going to look at AMC and the other sticks in just a moment. So we'll hop on over. Okay, financial highlights. Yeah. It wasn't good when they started off. We are pleased with our solid financial results. Like, usually when the company itself says solid, like as soon as I read that, if you go back, I feel you'll probably hear it in my voice or sense it in my voice. I'm like, okay, solid, okay. Like, not exactly the most exciting word choice. Oh, good. Okay, so somebody had the revenue estimate. So revenue estimates came in a bit higher, but I mean that's so the revenue came in at 39.6 versus 39.5. But okay, so what is that? 39.6 divided by, I mean, that doesn't even, it's certainly not, I mean, what is that, like 1% or something like that? Like 0.5? What do we got here? Ooh, 1.4%? Yeah, 1.4%. That's pretty nominal. That's a pretty nominal beat. I'm not happy. I'm not happy with it. Me as an investor, I'm a little pissed. And I have only a small portion left, but it's part of the part that I have left is part of my pie, and which is funny because it's food related. And I still like it. I mean, I got to figure out why that happened. That's bizarre. My guess again, I mean, I just want to leave it off on that. My guess in terms of why TTCF just crashed here is, first of all, going from profitability to loss. That's a huge problem, right? But the second problem is, what the heck happened with the operating expenses? Like, how do you spend $6 million more? Like, how many SEC attorneys did you have to hire? How many palms did you have to grease to go public? You know what I'm saying? Like, now it could be like, if there's a good explanation for that, maybe it's a buy the dip opportunity. If there's mismanagement happening or some mishiring, then it's a problem. And the revenue growth is okay, but during COVID, it makes sense. Are we going to continue to see that growth? Are they going to give us guidance? Did they give us guidance in the sheet? I don't think they did. Okay. All right. We're going to look at AMC right now. But let me go back here to, let's see if there was any other headline I could pull out of this. Tattooed Chef. AMC's out? Okay, give me 1 sec. I'll be right there. I do want to see it. No, they didn't really give us anything. Okay. All right, AMC closes. Okay, well, no, here we go. Reports fourth quarter results. Also no summary. Come on, give me a summary, will you? The big companies always have a summary, which is fun. Okay, so view the full results here. I don't even get a summary in here. What is this? I can't even open this crap. Oh, God. I feel like an old man who has to like copy and paste now. It's like, I don't want to have to do that. Oh. Okay, quite annoying. There we go. What is this? Internet Explorer on a Mac? What is happening? The world is falling apart. But maybe this will actually load this. How do I have Internet Explorer operating on this? I guess maybe they're trying to do this whole thing like as if it's in Windows or something like that. Yeah, of course it can't be displayed. Crap is that? Oh, stop. This is pretty annoying. Okay, well, I will just manually type it then. Oh, here we go. We got it. Or not. Oh, yeah, here we go. No, that's the conference call. Dude. Quarterly results. This is it. Okay. Conference call. Somebody have a link to this. This is so annoying. So, okay. Hopefully somebody has a link to the AMC earnings, because their website doesn't have it. And Bloomberg's being lame. I will try to manually type this in because I do want to see this. I'm going to go through this with y'all. So let's try this. businesswire.com/news home. Okay, here we go. 2021 031 000 5933. Man. Jeez. They made that so hard. What is this? Okay, here we go. Do I have to click on another thing? I guess so. Dude, AMC, what are you guys doing? There are no earnings. The statement, it's just not out. Here we go. There we go. There we go. Jeez. You call me crazy, but that was way too complicated. That was ridiculous. Okay. All right. Let's figure this out. So what do we got? Revenue. Oh my God. This is for Schadenfreude purposes. Okay. Revenue of 162.5 million for the last quarter of 2020 here versus revenue of 1.4 billion, an 88% decline in revenue, net losses of almost $1 billion. Oh my God. Wait, they were losing money last year too. Look at that. AMC was losing money. They lost $13.5 million at the quarter ending last year. And last year, they lost $149 billion. Holy crap. This year, this company lost $4.5 billion. Oh, ouchie, ouchie. Ay, ay, ay. This is pretty rough. I mean, I know we hope, like, look, I know there's a lot of hope for AMC to come back. But, oh, man. even in 2019, we were having problems here. Okay, so let's see. Cash was 308 million, excluding restricted cash. I mean, that's good. And they did pay off a bunch of debt. During the first quarter, drew down approximately 325 in loans, issued 500 million of 10.5% liens. I'm pretty sure they paid these off, though. I think they paid this off with, yep, exactly, they did here. Working with our landlords. Okay. Let's see. Okay, good. Somebody got an update here. Thank you for this. Somebody got an update on Tattooed Chef here. Let me quickly throw this in here. Thank you for this. Operating expenses increased $6 million. The increase in operating expense was primarily due to $3.4 million of stock compensation expense resulting from equity grants made subsequent to the merger. So in other words, hey, everybody, have a bunch of stock before we go public because we're going to get rich. So, I mean, it's a one-time thing. That's good, right? That's good. Because if we gave them that $6 million back, thank you for that. If we gave them that $6 million back, then things start looking a whole lot better over at Tattooed Chef. Because if we give that $6 million back, let's see, Tattooed Chef reports initial results. Okay, if we give this money back, $6 million, because it was for share expenses, then that's not as bad. Where is it here? Share expense. Thank you for sharing that. I love y'all in the group. It's freaking nailing it. Okay, so here we go. So if we give this back and the company went to like a 6 mil on top of this, so let's put 6 million on top of this. So loss from operations. So they would have had about $5 million in net. 5 mil net. That's about where they've been, though. See, 5.2, 5.7. They've kind of been having a declining net here. See, hold on a second. Hold on. 3 months ended. No. I'm sorry, because this is the quarter. Let's get our head on straight here, Kevin. $6 million here more would have actually been very, very good. So we had $6 million here more in the quarter, because this is year ended. If we had $6 million more in the quarter here, that would have been really, really good, actually. Because their net, their income before provision for income taxes would have been somewhere around 5.5 mil. That would have been more than 2x what they previously done. That would have been like 2.5x, almost not quite 3x. It would be about 2.5 times the net income. That's not bad. That's actually really good. And in that case, how many shares do we have outstanding? This many? Okay, so let's do, for example, 5 million in the quarter for quarterly results. Alexa, $5 million divided by 73.2 million. $5 million divided by 73.2 million is 7 US cents. 7 cents. That means they would have basically doubled the quarterly expectations. That's much better. That is much, much, much better. Okay, good. So that's better news for Tattooed Chef. They should have said that up front. This is how you freak out the market. This is exactly how you freak out the market. But it's fine. Now we got the answer. Let's see here. Where did our PDF go? Because we just had a lot of, there we go. Okay, cool. Going back to AMC, working with our vendors, landlord, studio, and other business partners to defer or abate significant expenses, including additional landlord negotiations. Good luck, guys. Jeez, man. I feel bad for them. Refile tax returns under the CARES Act provision. Tax credits. In July, we successfully completed a debt offering. This was last July. Okay. In August, okay, these are all the debt raises and payoffs they did. In February, our wholly owned entered into a new loan term for, okay. Oh, here we go. In January 2021, this is while the GameStop stuff was going on, right? The conversion by Cloudera sinks as revenue misses. Ooh, 10% on, oh, sorry, not Cloudera, Cloudera. Cloudera is how you say it. Anyway, January 21 on AMC here, conversion by holders of all $600 million of the 2.95 convertible notes due in 26 to stock, which resulted in an issuance of approximately 44 million shares and reduced annual cash interest expense by 17 mil. I mean, they were smart. They raised capital and paid off debt when their stock was higher. Okay, so they welcomed millions of guests where it was safe to do so. By Feb 22nd, the New York State authorized the reopening of cities under limits 25% seating capacity. They want them to go bankrupt. What the heck is this? Maximum of 50 people per screen? That's rough. That's tough. I mean, how about if you put some nice filters in, you're good. I mean, am I crazy? What's up, Jack? Jack says, I'm 17 and have a pretty good chunk of change to invest. I wish I was 17. That's awesome. Good for you, man. So I want to buy in and not look at it for years. Is now a good time? Yeah, I mean, if you want to buy into something and not look at it for years, get something more diversified. It doesn't have to be the S&P 500. Like, certainly, I would rather buy like an ARK fund than S&P 500. You could also pick your favorite 10 and be a little less diversified. Pick your favorite 10. Maybe it's like a mix of EXPI, Etsy, Tesla, Enphase, and some of the other favorites that we talk about here. Amazon, Apple, heck, why not throw those in there? Redfin, get a nice little diverse basket, although that's not like extremely diverse. It's pretty tech heavy. And park your money there and set it. But obviously can't give financial advice here as we're reading this AMC report. Oh man, AMC, you're killing me. As of March 5, 2021, AMC was operating 527 out of 589 domestic locations. Yeah, but these capacity restrictions, I hope it's not everywhere like that, because that's crazy. Okay, non-cash impairment charges, webcast information coming up. Okay. I'm sort of going through the whole thing here. I'm looking for the highlights really here. Let's see. Let's see how the stocks are behaving now. Let's go look at the sticks. Okay, so Tattooed Chef is still down. That's interesting. A nice fake out there on the net earnings, really. And that doesn't help. Although I will say, I think the net earnings, but then again, they said 6 million, but then only 3.4 was for share. I got to dig into this one a little bit deeper. I'm not wholly convinced that all of that $6 million would have gone over here. So what else do we have here? Okay. 10 years at 1.5195. VIX is down to 2261. Let's see how everything else is doing in the after hours. Bumble beating by like $2 million and skyrocket. Well, it's not really skyrocketing to go up 4%, but it's up 4%. Yay. It beat by 2 mil. It wasn't like a massive beat. Maybe they had a good forecast. They must have had a good forecast. And that makes sense because think about it. You're going to forecast, the reopening play at Bumble. So, of course, they're going to be really bullish on reopening. Like, hey, when kids get back out, they're going to go dating again. And they'll want Bumble. So that wouldn't surprise me here. All right. So AMC is it certainly pared its losses here a little bit. It's still down on the day. But I don't know that there's much to be impressed about, honestly, AMC. I think AMC has more of an uphill battle than GameStop does. GameStop, I feel like actually has a chance compared to the problems AMC is facing right now. We'll see. I'm hopeful for AMC because I personally would love to go back to the movie theaters. So I'm very hopeful. All right. So what else do we have here? Yeah, somebody's asking how can Bumble compare to like a Tinder and some of the others. I don't personally know. My guess, and it's a complete guess, is that probably the way you compete is with the niche audience that you attract, the type of clientele that you attract, and then maybe that might be more in line with what certain people are looking for. What's this? Here we go, AMC. Oops.
Reporting revenue of $162.5 million. That's about $20 million more than analysts projected. The company reported an adjusted loss of $3.15 per share. It is unclear if that's comparable to estimates. Now, CEO Adam Aron commenting on the unprecedented challenges the company has faced in the past year, but saying that during the fourth quarter, more than 8 million U.S. and international patrons did return to an AMC theater, and saying that with vaccines rolling out, theaters set to open, and more big film releases scheduled, they are optimistic. Guys?
Julia Borson, AMC up a little more than 3% after hours. Thank you very much.
That's
Adidas
good.
shares closed higher.
Good for them.
Rough year for the company. It laid out its 5-year growth strategy, including 8 to 10% growth per year over the next 5. I had a chance to catch up with CEO Casper Rorsted, asked him what gives him confidence that he'll see such a strong rebound coming off of a year where sales dipped 14%. Here's what he said.
And we're guiding 21 as a single year from with mid to high teens, and that will really be.
Okay, let's hop for a sec. Let's go to the sticks here. AMC is actually up 5% right now. Now, keep in mind, AMC does not necessarily have to move on fundamentals here. AMC runs because it's AMC, right? It's AMC and GameStop. So, I mean, good for them. Look, the more AMC runs, the greater their, ironically, okay, this usually companies get priced for bankruptcy and the stock falls, right? AMC is running up with the latest, societal movement to run AMC and GameStop up. The more AMC and GameStop run up, ironically, the less likely, I guess it's not really ironically, it'd be more like unironically, the less likely they are at actually going bankrupt because then they can raise money and protect themselves from going bankrupt. Makes sense to me. Save AMC is trending on Twitter. Yeah. Yeah, of course. I mean, I was expecting at the beginning of this live stream, blank screen for AMC earnings. The Tattooed Chef, there's some digging to do. Those operating expenses, that was not good. I wasn't happy with that. And I understand they're saying like 3 million, something of it was, of that 6 million was for stocks. I don't think that's what people were. I think people are having trouble digesting that. I'm having trouble digesting that. So I'm trying to differentiate myself. And I think that's why the market's reacting the way it is. And keep in mind too, I mean, my freezer concerns, they might sound basic and oversimplified, but that's a concern the market's going to be evaluating as well, in my opinion. The rest of the market, relatively flat. I mean, you do have AMC running here, which is really exciting. It's like, I think it just brings AMC into the forefront of attention. They got rid of a lot of debt, which is great. I mean, I don't think they're going anywhere this year. They could probably be mostly shut down all year and still be okay with their latest moves here. But what do we have over here? Redfin is suddenly up about 1%, although they did pay off the debt. It's not like they kept it in cash. So I'll have to look into that. But anywho, Churchill Capital up about 1% here. Not a lot of crazy movers here in the after hour, with the exception of AMC, which is just, here we go to the moon. So great. And again, it's like earnings didn't matter over here. So that's great. Rocket 1% over here. A few 1% losses over here. Let's see what we have on Tesla. What's Tesla up to? So Tesla's up about 0.5%. About 671, 672, right around there. NEO 4181. Both of them still buyable in my opinion. Under 45, under 700. I mean, geez, had we just gone 2 weeks ago, it'd be like, yeah, I'd buy it at those prices. Now we look at it and it's like, I don't know. Do I want to buy it right now? So it's such classic human psychology. Which, if you like learning perspectives on stocks, make sure to use that coupon code link down below that expires in 5 days. Get in 38% off, lifetime access to the lectures. We got the private live streams, stock alerts. Anywho, okay, let's look at the top news. Or actually, let's see what news is running on AMC. What other headlines we have running here. Okay, so lost nearly $1 billion in the holiday season. Yeah, that was crazy. But stock is gaining as executives see better days ahead. Oh, okay, so it's gaining on the executives' commentary that hey, we're gonna get back to open, we're gonna get more films in. Look, I hope so. I want AMC to do well, but I am concerned with some of these movies going to direct to home, this acceleration of essentially the Netflix culture. AMC was losing money in 2019. That's a problem. No, that's a little bit of an issue. Okay, AMC Theater, yeah, gosh, it's such a big loss. Impairment charges, including closed factories, beats estimates. Okay. Earnings per share misses by 0.3 or by 3 cents. Yeah. Well, I mean, it's It's obviously getting eaten up in the after hours, which is exciting for AMC. Good run here. Good for them. 9%-ish here. On the other hand, Tattooed is still sitting down about 4%. Rocket companies declining here. Actually kind of feeling, are we getting things turning red here? No, pretty flat in the after hours. Yeah, okay. Nothing too exciting here. Let's see what they've got over here.
To watch for, and just again underscores the uncertainty around all of these metrics in the coming months.
Inflation.
With regards to the wholesale prices and the idea that companies at some point will try to pass along that cost, we've kind of seen this in the past, or that theory that's come up in the past, and it hasn't really materialized because of some, I guess, a lot of structural issues that have sort of kept companies fearful of doing that. Is this time around, is this going to be kind of a similar story?
Well, that's kind of the way that, for example, Fed officials are looking at it. They're looking at the low inflation environment of really the past several decades, and they're saying, we don't necessarily see any enduring shifts here that would really change that story. So all of those downward pressures that we've seen from, those factors like, the international economy and trade and so on and so forth, it's not obvious at the moment that is going to shift in a dramatic way anytime soon. And that's why you hear Fed officials and people in the government saying, look, we've got a lot of spending coming, but we're not really too worried until we actually see proof, that something here is going to change and look materially different from, just the last several decades.
Matt, so as you mentioned, and as a lot of people expect, okay, we're going to have this reopening. Everyone expects it's going to be a while and several months and high hotel prices and maybe high airlines and other services. But on the other hand, so much of our spending is directed towards goods. And we know that there's been these bottlenecks and log jams and shortages in lots of goods. Could those things start to ease and essentially sort of balance out the expected inflation or price pressures that build in the services sector upon the reopening?
Yes, and actually that is a factor that, I've seen several analysts cite just in the reaction to the report this morning. And so that's something that is going to kind of balance those things out, as you say. And that's also a big reason why the consensus forecast for inflation by the end of the year, after we get through this little bump in the next couple months, are that inflation is going to settle back down into that, 1.5 to 1 3/4 range, well below the Fed's target. And it's going to be a very different conversation by the end of the year, precisely because some of those upward pressures on goods prices that we've seen during the pandemic are expected to unwind and kind of make space for that services spending.
All right. Our monetary policy and economics reporter, Matt Bozer, there. We'll catch up with him shortly.
All right. I always like hearing right now what people's thoughts are on inflation. I have pretty blunt thoughts, but yeah. All right. So otherwise, market pretty benign right now. I don't think we're really seeing much moving here in either direction. NGA is almost back to 17. So that's good. But yeah, otherwise, well, I think that's about it. I appreciate y'all being here. Love y'all. Have a wonderful day. Check out the courses link down below. And I'm going to go make another coffee because I want one. See you, everyone. Bye.